Hi, welcome back. This is Joe Rabil. So today I'm going to give you an example of a QQQ intraday trade. Now, for those of you who don't trade intraday, I still think this is going to be advantageous because all these criteria that I'm looking at, I'm going into a lot of detail on this trade, both on the higher time frame and the lower time frame, to give you the specifics I'm looking for. It applies in all different time frames. Now, I'm also going to go through the entry strategy as well as the exit strategy in this setup. And so I think you'll learn something whether you trade intraday or not. Okay, so I've got the QQQ up. I've got a 5-minute chart on the right and a 1-minute chart on the left. Now, when volatility starts to increase, I start to spend a little bit more time on the smaller time frames. Don't usually go down to this level, but this specific setup had pretty much so many of the things that I look for that I thought it was just a great example. And I'm sure some people will pick some things up based on how I'm going about looking at this. So we always start with the higher time frame. I'm going to do that. I'm going to bring up this 5-minute chart. Now look at what happened here. This came down and broke through this kind of key support area from the day before. All right, so that's kind of like the first thing that happened. I know we had a big reversal off the high and all that, but a lot of times my trades, when I'm looking at my trades, especially the 5-minute, 1-minute, or maybe a little bit earlier, like 10:30, or potentially in the afternoon, 1 to 1:30, maybe sometimes 2 o'clock. If I'm looking at a 10-minute and a 2-minute, sometimes those come out at 11:30, or a little bit later around 2:30. So I'm looking at this and I'm seeing, it opened up and kind of gave it up, and I can see that this trend has basically turned. I want to kind of figure out what kind of a day is it? Well, it's pretty bearish, right? I mean, this is a pretty bearish day. And then we come down and we take out the prior day's low. And look at the way it played out. Nice, strong momentum to the downside. Get confirmation here. Look at the ADX rising based on the sellers. That's the red, causing that blue line to rally up through the 25 level. All right. And we have MACD breaking away from the zero line and showing, this opening here between its MACD and its signal line, showing some strength to the downside. Then we get a 1, 2, 3, 4, 5 bar rally. And notice how the 18 and the 40 are moving down at about the same rate. They're almost parallel at that point as this is rallying up. Notice how the MACD is pinching into the signal line, which is now declining and showing that the trend of the momentum is down. All right. Now, when we have this, once I start to see 2 ticks to the upside, probably sometime, in this case, because it was pretty far from the 18, probably wait for 3 of these bars to rally. I'm now going to go down to the smaller time frame, because what I want to discern here is I want to see how strong the rally is. Is the rally showing real strength in the buyers? Because if it is, then I don't want to take this trade. All right. If in fact it's not showing a lot of strength, then I'm going to hunt down the earliest entry I can find on the small time frame 1 minute. Now I like to use a 1-to-5 ratio. Sometimes I'll use 1-to-6. So in this case, it's exactly 1-to-5, 1 minute to 5 minute. All right. Like a weekly and a daily is a 1-to-5 ratio. It's a perfect ratio, I think, for my strategy. All right, now notice the way this played out. We had all this strength to the downside. That's what this is saying here, right? That's confirming what we're seeing here. We're seeing this big move in ADX. It reached almost 70. Then we get our rally, and we get basically a pretty good retracement back up, but all it does is get the MACD back to the zero line, okay? And notice what ADX is doing. ADX can't rally here. All right, now this is a 1-minute chart. Now I've given you examples of a monthly and a weekly doing this, but the same pattern is developing on a really micro time frame. Now, what I would tell you is I'm looking for the earliest signal on this intraday chart that tells me it's getting ready to go. Now, based on from my courses, I have 4 different trigger methods here, and based on the way this is played out, I would be using trigger 1. Assuming this breaks the trend line, that would basically be the trigger. Let me put in a good trend line here. So if in fact we do break that trend line, then that would be the trigger. However, if you notice on the bar that came down to the trend line, we had a monster red bar. To me, that's a pretty strong signal crossing back down through both moving averages. And based on the way this played out with this, and the fact that the ADX has remained pretty strong throughout that rally, I might jump the gun on the trend line break and go ahead and take the big red bar. You'll notice a lot I'm looking at the big red bar. If you don't want to do that and you want to stick to the letter of the law, then you'd be getting short on this trade here. Now, the MACD turns and closes, it gets back below its signal line and the zero line right at the same time. Red DI starts to get going and crosses back above the 25 level. So we know the bears are kind of getting in control here. Now, what we want to do on the exit side, and what I like to do, is measure the strength of the decline based on the red DI. Because this is the sellers. This is the strength of the sellers. Are they continuing to push it to the downside? If they are, then I want to stick with it. If they're starting to show signs that maybe we're not getting more downside progression, or there's a sign of divergence, then I want to be looking for an exit point. And so what I do is I will give it a lot of room. If this is making higher highs, the red DI, as this is making lower highs, then I'm probably going to give it some room. I might give it, 2 ATRs of room, maybe give it behind the 18. I'm just going to let it trend. I'm going to let it keep going. And then if I make a swing high and then a new low, then I'm going to come right up above the swing peak. We didn't have any of those along the way until this happened. And we had confirmation at the low. So I'm going to let that play out. And then when we go to a new low, my stop's going to go here. Now, here's what happens. If you notice, we go to a new low here, but the DI line makes a significantly lower high. This is divergence with the sellers. There's not as much selling strength on this decline here. So when I see that, I'm now going to tighten my stop from here. I'm going to come right up above. So as soon as this went to a new low, it was on this bar right here. I'm going to come right up above the high of that bar. And I might use the 2-bar high because they were so close. And then I'm going to wait for this to be taken out, and it would have been taken out in the next minute or two. And then I'm out of it. And yeah, it made a minor new low, but from that point on, that was pretty much it. We got the lion's share of the move. And when you're day trading like this, you don't want to be a pig, I don't think. I think you want to go and get an exhaustion run, and when the momentum starts to slow down, you go ahead and pull the plug on the trade. All right, and so that's how I would handle that. Now, I don't have a problem taking partial profits along the way, if you want to do that. But this is a great method, I think, to exit a trade using the DI line. And you can do the same thing on the upside as well. They both work. All right. So something to keep in mind. But I thought this was a great example on 2 time frames of pretty much everything I try and teach on the pullback trade. If you're enjoying the content, hit that like button and also subscribe. Now, my services, as well as my book and my courses, can be found at rabilstockresearch.com. If you're new to this approach, you might want to just start with the book. It does give a decent amount of detail of how to trade in multiple timeframes, especially with MACD and ADX. Okay, so as we start out with the QQQ, let me just show you something in this ACP program that I think is pretty neat. So I'm looking at this weekly chart, and there are times when I like to see the zigzag. Now, I have the zigzag up here in the upper left, but let's say you just have the 4 time frames up and you want to see the price pattern with the zigzag on it. I can go and hit this drop down menu, and I've got all these different templates. And so I've got one that's set up with the bold blue or purple zigzag already set up on here. And it just makes it really easy. Now, if I wanted to, I could go and just switch back to my standard 1840 simple moving averages with the MACD and ADX, and that would be what this chart looks like here. But my other option is to actually go here and just turn this off. And now I've got the same chart that I have with everything else, and I can quickly just access this whenever I need it. So something you might want to think about, I think these zigzags are really helpful in seeing the trend. And if you're ever in conflict and trying to determine what is taking place in the trend, I definitely recommend turning that thing on, taking a quick look, especially when you're looking at it in multiple timeframes. I think it can really help. All right, let's get going with the QQQ because some pretty important things look like they're developing here. What we've been discussing is on the daily chart, this momentum loss. You see how the ADX peaked here in December last year. That was the peak on this move. And then we made another move to the upside, and the ADX was good enough to keep it trending. It's above 25 here. So we can continue to play, to the upside. But then as it started to move into March, this is really where we started to see the problems, because even though it did push to another new high, the ADX was starting to fail right around the 25 line. And then it made one more last gasp move up here to eke out a minor new high, and the ADX didn't even get above 15. So when we start to see that, you should be thinking that we should be on the lookout for a reversal in the pattern. This is really this is where the momentum gets very exhausted. And when that happens, we should be expecting the 18 to cross down through the 40. That's how I would view a reversal pattern in this specific type of divergence. Now, most divergences, when I get divergence like this, I'm only thinking pullback. I'm not necessarily thinking that we're going to get like this divergence caused a pullback. That's pretty much all you should expect from a MACD divergence. But when you get this type of ADX divergence, I think it's pretty important. So we had that taking place. Now, look at what's taking, and the other thing that we were looking at is the relative strength. Look at how this black line relative to the S&P has been sort of ticking down. When this was making a new high and momentum was starting to diverge, like I was just showing with that ADX, we were also diverging on an RS basis. We weren't confirming the trend. And now all of a sudden we're getting a lot closer to turning this moving average, this 30-period moving average of the relative strength to the downside. So I'm watching that very closely. So look at what's happening now on the 18-week, right? We're getting this big monster red bar. Now we still have, it's early on Thursday. We still got a couple days left. It's possible this thing could come back and still hold its 18. But if we close where it looks like this, or it's even bigger and it's mostly all red, I think that's pretty important. One thing that I'll tell you is that the MACD has already crossed over its signal line. And I don't think we can recover that. I think that this is going to be crossed over either way. In fact, I think it crossed last week. So the point I want to make with that is that when I see that, then I'm starting to think I don't need to be in a big hurry to play another up move. All right. Look for some kind of if we do get a rally, it probably rallies up, maybe retraces like half, and then comes back down and tests. So we got to be a lot more delicate with any kind of new buying we want to do in this area related to the QQQ, because the momentum shift, the potential break of the 18-week, the fact that the relative strength has started to tick down on a relative basis, and also obviously we're in this exhaustion setup. And notice the volume pattern. You see how, so I like to I have this 50-period moving average of volume. Notice how the volume was actually pretty good back in January. And then we started to see a few signs of distribution showing up, but now it's getting a lot more pronounced, right? And then more recently, it's been pretty much just selling pressure. So it's the type of thing you want to be on the lookout for, but I'm watching this ADX as well. And in this case, it gave us an early warning sign. All right, let's look at the IWM, because this is another disappointment, but we're in a position where if it can hold this support level here in the 190 area and turn up from here, we've got the 18-month support right here that we're holding. And, this will be important to see if we can hold that area and turn up from here, especially if the RSI 20 in red can hold the 50 level, and then the RSI 5 can turn up while this price turns up and makes a higher low. Then I think we're in a much stronger position and we could start to see the relative strength improve. Right now, I think we're in for a little bit of a wait. I wouldn't expect anything to happen this month. I mean, other than a bounce, we could get a bounce up to 200. Okay, so the first request here is in the crypto space. It's ETH. And so what I wanted to do is there's something interesting that took place in this. So first of all, we had a pretty nice pattern, really good strength, and then we got a pullback. And we had good momentum characteristics in this, and we got our pullback. So the reason why I use 2 time frames is that I don't want to just look for taking out a prior bar's high or something like that as an entry. I want to go down and look at the price structure on the lower time frame. In this case, what happened was we went through our consolidation pattern, and in the process here, we overran, before this turned up, we overran the zero line. Both of these lines dropped down below the zero line. All right. And when I see that, what I tell my subscribers is I want to wait for a higher low to form. All right. And we did not get that. We had one move up, we came down, we tried to turn up, and we failed. So in essence, we want to look at the strength of the decline and figure out how long it's taking. Because if it takes a while, then we gotta give it a little bit more. It's got to have a little bit more of a definitive reversal. So by following that, I mean, I have 4 different types of triggers, and a lot of them are based on the strength of the decline based on the MACD and the ADX. And in this case, we did not trigger. So now we're waiting to see. We're still above a rising 18-week. We still have good momentum characteristics, but now we need a new trigger to take place. And because the MACD is in this position, we're going to need to move up. And then we're going to meet a higher low, and probably want to see green DI do the same thing to kind of confirm, because this is a pretty nasty little sell-off with volume behind it. All right, so be patient a little bit with this. Like, we can keep it on our watch list. I think we need a little bit more time before it's ready. Okay, so we're looking at the QQQ earlier. Well, let's look at a few of the few of these requests that came in were inside that. So I thought it was good to start with it. Look at what's going on with Apple. Apple is threatening to break the 18-month line. All right. So we've been kind of consolidating here, and we talk about the relative strength. Look at the relative strength in Apple. It really peaked last July. Right. And now we made a lower high, and now we've clearly been trending to the downside this year on a relative basis. That's a pretty big negative for Apple. All right. And then we've got this key support area around 170 that we're slipping down through. I think, I think I'd start to get a lot more worried if we take out this prior area at 165. I think we're in, the risk really increases here for a continued drop, and maybe down into lower, maybe down to 150 or something like that. So I wouldn't be in a big hurry to be a buyer in this. We've already got overrun. The MACD has clearly broken the zero line. Not a lot of strength in the selling at this point. So that's why I'm not necessarily looking for some big decline, at least not yet. But it could have continued weakness in the near term. Okay, so AMD. So, so let's just look at what took place here. And this has taken place in a lot of stocks. We had a beautiful setup here. Basically, to end last year, beautiful pattern of green DI ticking back in. We got a pinch play. We get this breakout move, and we go up for 1, 2, 3, 4, 5 months, and then reverse in the last month. Okay. And look at that reversal pattern right at the 200 mark, the big round number. So that's not a small thing. I mean, I don't think it's not like you go up for that long and then you have a big reversal that you should be expecting a quick turn to the upside. So now we've got that kind of weighing on us, but at the same time, we can still continue to watch and see if we get a setup on this time frame, but we've got overrun now. So now we've got to look for some kind of consolidation to take place. I don't think the MACD is, when the MACD does this, unless it comes down to the zero line, I wouldn't be expecting a big turn. The other thing I would tell you is that we never got a trigger on this time frame. Again, the reason why I use 2 time frames, I use the lower time frame for a trigger. And all this is covered in my courses, but what I would tell you is that if you follow this approach, you would never be buying this. Even though this did take out this high here on this weekly bar, you would have seen that was just a rally into a declining 18 on this time frame. All right. So we've broken the 18. MACD has rolled over. I think this is going to need more time. Now, one thing I'll tell you is because the ADX is strong, I wouldn't just discard it. I would keep it on a watch list. But now I know, based on what the MACD is doing, I have time. I don't need to be I don't have to be on pins and needles watching every tick in this, because I think it's going to take a little bit of time. Now, we've got this move in Meta. I'm sure, a lot of times I get requests of people who are in stocks and they're trying to determine whether they should stay in it. Now, this has a lot of strong momentum in place, both on the monthly and the weekly. But look at what's taking place on the daily chart. So we had incredibly strong momentum to the upside here, big move, and it had a big gap up and everything. And now we consolidated a little bit, and then we went to a new high. But look at what the ADX did. Very similar to what I was talking about with the QQQ. So a little bit of concern here. Now, because the momentum on the higher time frames is so much stronger, I'm not all that concerned about this falling apart, but I think that this is likely going to reverse to the downside, probably get some more weakness, come down to support on the weekly chart. Okay, look at TOL. Another one that is showing a pretty strong pullback, right? I think if this makes it to the 18-week, then the MACD is probably going to cross over, but something to watch. I just have a hard time believing with the gaps and everything that I think we're going to see some overrun. I don't think there's going to be a setup. You can see on the monthly, we had last big green bar up, and now we've erased it with this last month drop. So momentum signs are good here. I'm just more of the opinion that it's going to take a little bit of time. So VTRS, again, look at this. So it came down, it tried to trigger, it never got it back above the 40. It never really triggered on the long side. We had overrun here, so we were waiting for more confirmation. So this was a decent looking pattern on this here. So we get a setup, but we never get a trigger. All right. There's a difference between a setup and a trigger. You got to know the difference. And in this case, we never triggered to the upside. And now it doesn't look like it's a setup anymore because we've broken the 18-week and the MACD has rolled down. I think it's going to take a little bit more time to get going. AVPT. So, I mean, the one thing I'll tell you is when I look at a stock like this, look at all the volatility. You see all this this movement's not that bad, but then look at all this movement here. It's just a little too volatile. I want to see this quiet down a little bit, I think, before I would have too much interest in it. We've got a flat 18 here, and we're trying to work down to the zero line. Now, this could be setting up on a monthly and a weekly because we had a strong move to the upside and we're consolidating back towards the 18-month line. And this is sort of working its way back down to the zero line, and the momentum on the weekly is good. There's no sign of real selling, but I think if we're going to do that, we're going to need this to break out on the weekly chart. I don't really like this setup or the pattern developing on the daily chart. I would be more inclined to be watching this for a potential monthly, weekly. Now, the problem with this stock, BGS, is that you've just rallied to a declining 18-month line. MACD is crossing over, but I think we need to see more confirmed evidence that there's a shift taking place and then look to buy the first pullback on the weekly chart. You see how we got one green bar, but we didn't get any real strength, and the MACD isn't even above the zero line. So we need more strength here, and what that'll do is that'll get this above the 18-month line, and we'll get through the the MACD will get through the zero line on the weekly, and we'll get better strength in the momentum. Then we could look to play the next pullback. Thanks for joining me. So if you have any stock requests you'd like me to analyze on next week's show, send it to stocktalk@stockcharts.com, or you can just put it in the comment area. Also, my YouTube channel is called Invest Like a Pro. Have a great week, and we'll see you next time.